right, fantastic. So, welcome to Coffee with Marcus. So, the idea here is that we're having a coffee together and we actually talk about trading. And you see, my mug actually says, follow your plan. So, if you recall in the previous shows, first of all, we talked about my favorite trading strategy, which is the wheel strategy. And I explained to you the basics of the wheel strategy. And then also previously, we talked about how I'm finding the best stocks to trade for the wheel strategy. Today, I wanted to share a couple of trades with you that I took today. One of the trades I took, another one I passed on. I want to show you exactly what I did and why. So let's jump over to the screen so that we can take a look of what's happening. As you know, I'm using a tool called the PowerX Optimizer. This helps me to find the very best trade. And just as a very brief recap here, when trading the wheel strategy, first, we are selling put options and collecting premium. Then we might or might not get assigned, and I'll talk about more what that means here today as we walk through the trade. And if we do, then we sell calls and collect more premium. So that is the basic idea of the wheel strategy. And previously, I shared with you my criteria for finding the right stocks. And one of the stocks that showed up on the scanner today is PM. Philip Morris. Hold on, let me just show here the income statement so that we can quickly review my criteria again. So, first of all, for me, the stock should have a low P ratio, and the P ratio I would like to see lower than 50. So that's given here. Philip Morris has a P ratio of 18.36. I want to see that it's paying a dividend. And Philip Morris is one of the higher dividend payers, 5.32, but that is not my main goal here with the wheel strategy. I just want to make sure that they're paying a dividend. This way, they're not a growth stock, they're more of a value stock. I also want to see that there's a market cap that is more than 5 billion. Now, Philip Morris had a market cap of $147 billion, give or take, depending on where the stock price is trading. And then I also want to see that they are profitably, and you see profitable, and you see we have the blue bars here that is indicating their revenue and the green bars indicating their profit. And over the last 5 years, as you can see, super stable in terms of revenue, super stable here in terms of profitability. So this is a stock that popped up that I find interesting. Now, the question is, where exactly do I enter? So one of the things that I would like to see is that the stock has actually traded in a range. And if you're looking here at Philip Morris, we see that over the past, almost year and a half, since the beginning of 2022, Philip Morris has traded in this range, which is somewhere approximately between 90 on the low end and 105 on the high end. We see that there's a few spikes to the upside, a few spikes to the downside. But again, I'm mainly interested where have most of the time prices been trading. So this is why I was kind of excited when this morning I saw that the 90 strike price was popping up. So this was earlier this morning. Right now we are looking at the 91 strike price, but even this is pretty good because let me show you. If we were to take this trade right now, so at 91, and we would sell the 91 put, and that is the 91 put expiring on Friday. So we basically only have 4 DTE days to expiration. Now, right now, Philip Morris is trading at 94. And so here's what's happened when you're selling puts. If on Friday at the close, Philip Morris is trading above 91, this put expires worthless and we just keep the whole premium. If we are trading below 91, it means that now we have to buy the stock for 91, but we still keep the whole premium that we are collecting today. So let me just walk you through this trade and what it looks like. As you can see here in the lower right-hand corner, this is where I already have some basic information that I like to see. So the strike price is $91. Expiration is September 29th, which again is in 4 days from now. it requires $9,100 in buying power per one contract traded. There's a delta right now, it says zero, and there's an RI, and that's the annualized RI of 32%. So if I am interested in trading this, this is where I simply click on add, and this will add it to my calculator. You see a new screen opens here that gives me some additional information. Again, right now trading at 94.06, we have 4 days to expiration. I'm zooming in a little bit more so that you can see it. The strike price that I'm interested in is 91, and right now I could get 40 cents for this. So based on my buying power and the position sizing that I choose, this means that I would collect $880 in premium. You also see here that Philip Morris could drop another 3% before I'm getting assigned, which is, I would say, pretty good, right? And so if I'm normalizing this premium over the next 4 days, or actually 5 days, today is Monday. So it's Monday morning. We actually have Monday, Tuesday, Wednesday, Thursday, Friday. So 5 days. It means that I would make $176 per day. And again, if Philip Morris stays above 91 by Friday, I just keep the whole premium. If it goes below, I would have to buy 2,200 shares because I'm planning to sell 22 contracts here. And then also, I still keep the whole premium of $880. So that is a trade that I took this morning. I did it slightly differently because this morning, Philip Morris was down a little bit more, and I was able to actually sell the 90 put. So same principle. I also got 40 cents for this 90 put, or $40 per contract traded. And as you see, based on the buying power and the position sizing that I choose, I should trade around 22 contracts times $40 is $880. So this is a trade that I really liked and that I took. Another trade that popped up, just to show you how I'm going through all of this, is TXN. Now, let me just ask you, if you're here live, you see that one of the advantages of being here live is that you can ask me questions. So would you like to see another example here? If you're watching the recording, you can leave a comment, but I'm not checking the comments that we leave on the recordings that frequently. But if you're here live, let me know if this is helpful as I'm walking through these trades, because I want to show you another trade that popped up that I really like. And this is actually TXN, Texas Instruments. And again, I'm just showing here the income statement before we look at anything else. And here we go. So first of all, again, my criteria are, I want to see that we have a low PE ratio, and I want to see that this PE ratio is below 50. I want to see that they are paying a dividend, which they do. I want to see that the market cap is above 5 billion, which it is. It's 145. And I want to see that their revenue and profits are stable over the last few years, and it is. So this looks like a great opportunity. Now, if you look at the chart here of TXN, and again, looking for possible support and resistance, we actually see that here TXN has been trading sideways and has been trading, I want to say, probably between 160 and 185-ish, maybe 190. You get the idea. A few outliers to the bottom, a few outliers to the top. But we are looking, what has it done most of the time? That's what I'm looking for. So this is when I saw that the 157.50 this morning popped up on the scanner. I thought, wow, this is pretty good. And again, we get some basic information here, but now we can pop it over into the calculator so that we have all of the information that we need. So here, right now it is trading at $160. We can sell the 159.50 put, which means that if by Friday we are above 159.50, everything is good. We are we are keeping the premium. We are not getting assigned. However, if we are trading below 157.50, then we do get assigned. We still keep the premium. Based on my account size, I should trade 13 contracts, and right now I could probably get 83 cents. So this means that I would collect $1,079 in premium. Again, compare this to 880, very similar. Difference is that here I would make $216 per day. And you see that this is a little bit more aggressive because this stock can only drop 2% before I would get assigned. And this is where you can just make a decision and say, what is the best thing for you, right? I mean, would you like to get assigned when a stock drops up to 3%, so to have a little bit more buffer? Or if you only have 2%. Both stocks, I believe, are great candidates here. As I said, I did take the Philip Morris trade, and the reason is because I already have 4 positions in my account. So this is where I'm looking also at the asset correlation because I want to make sure that we are not too highly correlated. So right now, the 4 positions that I do have in my account are PNC, NEE, CSIQ, and UPS. So these are the 4 positions. So now I can just simply add a 5th position here and see the correlation. So if I go to PM Philip Morris and look at the correlation, oops, let me do this. So I'm looking at how much were these stocks correlated over the past year. And you see all of the correlations here, and you see the correlation strength, right? Which basically means if the correlation is, let's start here, -1, it means that they're the complete opposite. It means that if one stock goes down, the other one goes up this way, right? But you get the idea. So that they're moving in opposite directions. If the correlation is at 1, it means that they're moving in the exact same direction. Let me give you an example. For example, if we would look at the ticker Google, which is GOOG, and then also they have preferred shares, which is Google. You see that these are moving exactly the same. This is why there's a 1. You don't have this often, but you get the idea. So what I want to see is here a correlation that is 0.65 or lower. And as you can see, all of these correlations are even below 0.5, 0.50, which means that they're not very correlated. And why is this important? Well, if you have a high correlation, then your portfolio is too heavily invested in one sector or in the same stocks, right? So it's almost like doubling or tripling up on a stock. And again, just sharing here with you what I'm doing. Of course, you can do whatever you want. You're an adult, you can have ice cream for breakfast. That's a beautiful thing of being an adult. And this is where also you're trading. Do whatever you want. But I really like right now the way how my portfolio looks with a very low correlation with very strong stocks that you see here. PNC, NE is Next Era Energy. PNC is a bank, so we can just zoom in here. So you see I'm in different sectors. I'm in financial services, in utilities, technology, solar. I'm in industrials and consumer defense, tobacco, which is Philip Morris. So there's a total of 11 sectors in the S&P 500, and I'm diversified here over 5 sectors. So I'm really liking this a lot. And yeah, that's where we stand. This is what happened here today, and this is how I'm finding the trades, how I'm then deciding to place the trades. And the important thing is, right, when placing an order, there's actually 5 things that you need to know. Number 1 is what do you want to trade, right? Here in this case, it's TXN. It is a put option expiring September 29th with a strike price of 157.50. The second thing is that you need to specify, do you want to buy or sell? In this case, we want to sell. The third thing that you need to specify is how many. And here we have 13 contracts. Again, this is based on my position sizing. Your position sizing might be differently. The fourth element is at what price. And at what price? It's 83 cents. Now, finally, the fifth element is, do we want a GTC or a day order, which basically means for how long does an order need to be in the market? And I choose day orders here if I'm not getting filled today. Pretty much if I'm not getting filled right away within the next 5 to 10 minutes, I'm okay scratching this trade and looking for something else. So just to summarize what we have done here so far on this Tradier Hub, and this, see what I like about the Tradier Hub, you have different educators showing you how they trade, what they think about the markets. So as you now know what kind of strategy that I like to use, which is the wheel strategy. Secondly, you know how I like to select the stocks, the underlying stocks that I want to trade. And now you have very specific examples of how I'm picking my trades and what trades I'm taking here. So, in the upcoming sessions, we will talk more about the trades. We'll take a look at these trades and see how are they working out. And what I want to do in one of the upcoming sessions, also talk about the second part of the wheel. Again, what we are doing here is we are selling puts. Then we might or might not get assigned. And if so, we are selling calls. So what we have done so far is we talked about selling puts. This is done. Now, getting assigned is something that the markets do for us. There's nothing for us to do. And then in one of the upcoming shows, I'll show you how to sell calls. So this is where I want to make sure, stay tuned. If you do have any other questions, please make sure that you join me live here. I'm live here on Mondays at 11 o'clock Central Time, 12 o'clock Eastern Time, because this way we can have a conversation and we can have a real coffee together. Well, kind of a virtual coffee together and talk about different trading plans, because that's what I like to do. Follow your plan, and whatever trading plan you have, you need to make sure that you're following this plan. Hey, if you find this helpful, do me a favor. There's probably somewhere a button to like this video, or possibly also to leave a comment and saying, okay, you're enjoying this. This way, I know what to prepare for the upcoming shows when we have more coffee together. Until then, check out all of the other shows here on the Tradier Hub, even the recordings. They're pretty cool. And we'll see you again next Monday. Take care.